at this point, heading into the overnight session and heading into tomorrow, I think short term we can still use that 3196 to roughly 3200 as short-term support. Holding above that would tell us that at least on the smaller time frame, the buyers are still active and participating, whereas a break below that would bring today's low into play, the 90 to 91 area, and potentially even the initial support zone from today. If we look at the hourly chart here, you can see there's a very distinct and clean balance that has been built, and it's essentially from roughly the bottom of initial support 3181 to 3231, right, on the upside. So that's currently the balance we're dealing with. Within this balance area or trading range, 98 quarter is currently the high volume node, so we'll kind of keep an eye on that. And as we head into tomorrow, and particularly tomorrow afternoon, it seems like the market is now kind of setting up to break this balance one way or the other, right? Now, if we break to the upside, then you can see that it opens the door for range expansion into that next area of resistance and possibly even higher, right? If we get a successful breakout, then we don't necessarily have to stop at 46.75 to 50.75. We could even expand the range a bit higher. Whereas if we get a breakdown below 3181, then you can see that simply a 50% extension of that area takes you down roughly to 55. A 100% extension takes you down to the recent multi-day balance breakout area at 31.24 to 29.5. So it's very possible that overnight and heading into tomorrow, the market just continues consolidating, and then maybe we get some directionality off of the FOMC announcement tomorrow afternoon. That would be very typical, very normal. If the market breaks out or breaks down ahead of the Fed announcement, unless it's happening on big volume and momentum, the zones above and below can still attract sellers at resistance and buyers at support. So timing makes a difference too. It depends on when that move takes place. If it's prior to Fed announcement, it's less likely to stick. If it's after the Fed announcement, it's more likely to stick. But one thing I think is very clear, and that is that the market is at a short-term inflection point yet again. And now we're going to find out, do we get breakout continuation beyond the strong and larger time frame resistance above, or do we get a failure at that larger time frame resistance? And then if we start breaking down below 3181, then as long as that breakdown's happening on broad market weakness and sustained downside momentum, then it wouldn't be a stretch to see ES drop back down into the 45.5 to 50.5 area quite easily, and possibly even down towards the 32 and the 24 to 29.5, where buyers can be active on first test. And then, like I mentioned earlier, if we look at NASDAQ, you can see that even though it broke out to a fresh all-time high, there wasn't even broad market participation within the NASDAQ. So it's not even that all the stocks in NQ fully participated in today's move. And that's why I'm saying that it's a very isolated rally, and that is a concern. If it was a broad market rally where everything was breaking out and going higher, and we were breaking out on some healthy and positive breadth readings, you would expect the NASDAQ advanced decline to be at least plus 50 or 70 on a day like this, where it's breaking to new highs, and yet you can see there's this very clear and obvious divergence between the advanced decline and what NQ did today, right? And then at the same time, even though we've hit this big number and milestone on the upside on NASDAQ at 10,000, many times these big round numbers can act as big resistance as well. So there is kind of a psychological resistance here at 10K on NASDAQ. And that's why we have to continue to be flexible. That's why this is not just a buyer's market. It's not a market that you want to be complacent with and just think, well, I'll just buy the next pullback or I'll just keep buying until it doesn't work. That's how strategies give back a lot of their previously accumulated profits, is that they stay stuck in one regime and they don't notice the signs of any type of change, or they're not even open to it. Because of course, when one regime is working, the majority of participants who are in that regime want that regime to continue, right? So call it confirmation bias, but on our end, particularly as day traders, I think we need to always be flexible. But at this point in time, there are objective reasons to not be only bullish and remain flexible and open-minded. And if things start to change, then at the very minimum you're prepared. And again, this is not a me saying that the top is in or predicting a big breakdown or something like that. We're looking and we're trying to look at the market very objectively. This is not about emotions. I mean, I have no position in the market. I don't care where it goes. I'm not long or short right now. That's the beauty of being a day trader. I'm flat. So I don't have a horse in this race, right? Whether it goes up or down doesn't make a difference to me. Just trying to look at it objectively and help the traders that are part of the group on E-mini player be well prepared and stay on the right side. If we look at just the daily chart even, this is a pretty parabolic move. Now, the risk with parabolic moves is that sometimes they can continue longer than most people anticipate, and that's why we need to be flexible, and that's why it's not just playing defense and getting bearish. Now, as you saw yesterday, anytime the market gets overdone into larger time frame resistance, there's usually a pretty decent response, right? We had that big HVN at 31.75, got a pullback down to 31.90. Now, as a day trader or as a short-term trader, you're talking about a 40-point move off of an area of resistance. That's very significant as a day trader or a short-term trader. So, for now, the bigger picture is still clearly quite strong, but I think we are kind of at this short-term point where, hey, either we break out and we go higher, or we fail and we go lower. I think the sentiment is pretty mixed right now, even just looking at kind of the opinions of people on Twitter. I posted a poll yesterday on Twitter asking which open gap is more likely to hit first. We have one up at I think 33.28, and we have one down below at 31.87.5 and 31.10, right? And it's a pretty mixed response. But what these polls can be helpful with is just kind of providing a bit of a sentiment reading. Like where are people leaning in general, and so looking at the results, it's 49% voted for 33.28 and 51% voted for 31.10.5, and that's exactly what makes a market. These varying opinions, and that's what we see playing out every day on the charts. All right, guys, so that is the view kind of heading into tomorrow. We'll obviously pick this up again tomorrow morning. At this point, I'll cover some of the questions, and then we'll wrap it up.